Good morning, good afternoon, and good evening first, depending in whatever time frame you guys are based in. To begin, as always, I need your help. So I just wanted to see that if you guys, okay, I can already see that the people are excited and then they can hear me. So pleasure. Thank you for being here, and thank you for taking the time out. And just that everyone can hear, and then they can see my display if you can. Okay, Mario, thank you for confirming. You are one step ahead today. Okay, that's good to know. All right, okay, so my name is Naeem Azam. I'm Chief Market Analyst at Evertrade, and it is an absolute pleasure to be with you today for our masterclass. The markets are going absolutely bananas, and that means there is an enormous amount of opportunity for us. It doesn't mean that we have to push for an opportunity. It means that there is an opportunity here, and we have to practice patience, and we have to look for the right opportunity which fits for our portfolio. Getting panicked just because of the volatility, just because the Dow has dropped 10,000 or 5,000 or 200 points, doesn't necessarily means that this is the right opportunity for you. It only means that yes, the opportunity is here, but for you, that may not be the best suitable opportunity. And this is what we will explore in this webinar. So in our series of a masterclass today, we will discuss how to trade indices. A little bit about myself. I come with a wealth of trading experience which spans over 10 years, and during this period I have worked as a hedge fund trader with Bank of New York Mellon and Bank of America, and currently providing the research services to Evertrade as a chief market analyst. On a daily basis, the research that you read or the videos that you watch, they are all done by myself. So keep up with them, because there is certainly enormous amount of information in there, which we will expand in a little bit. Now, as always, for some of you, it could be a little bit boring for the first 5 minutes. So maybe, stay with me and try some patience, because trading is all about patience. But in a series of questions, I'm going to ask you 3 questions, and we'll do this very quickly because a lot is happening in the market. So first of all, if you have been trading under a year, please say yes, because what this does is this helps me to gauge the practicality, the complexity of this webinar, so that I can fine tune my analogy and my analysis accordingly. Okay. So if you have been trading over 2 years, then please say yes as well. And guys, I just wanted to make sure that, if this is your first time with me on a webinar, or if you haven't, if you join later on during this webinar, all of the webinars are recorded and they are uploaded on our website, which is on YouTube channel, which I will show you in a bit. Okay, so what I can see is that as always, there's a bit of a mixed crowd, so we will fine tune things accordingly. But let's begin. So the most important thing first, as always, it is important for me to go through this disclaimer. So anything which will be discussed in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, the most important thing is that if you are an equity trader, or if you're a forex trader, commodity trader, it is all about getting the information at the right time. And because if the move has happened and then you are looking for any information after that, then you don't really have too much of a skin in the game, because the move has already happened. So what you want to do under those circumstances is to have all the information delivered directly to your mobile phones. The best thing to do for that is to be on Twitter, because during the last 4 years, if we have learned anything, it is that Donald Trump likes Twitter, and that if we have to tolerate him for another 4 years, then we better be on a Twitter. And I'm very, very active on Twitter. I answer your questions as well. I try my best with them, and we produce really great ideas on that. So speaking of it, the handle which is right in front of you, this is my personal Twitter handle, which is Naeem Aslam23, and of course Evertrade's handle is there as well after and right. And our YouTube channel is the Daily Fundamental. We produce two different sort of videos. One is the Daily Fundamental videos, where we take things a little bit on notch down, and then we bring them a little bit notch down, and then we break things in a more digestible way for you guys. But for those investors who like to trade a bit more technicals, who are more sophisticated on a daily basis, I do the technical analysis video as well. So let me show you how to find all of that before we continue any further. So what you do is, this is the Twitter handle for myself, as you can see right over here. So feel free to follow. Like you can see, there's been a fair amount of interaction with everything that we're talking about. In relation to Evertrade, make sure that please you follow the right sign with the right tick over here, because there could be a fake channels out there as well. And with respect to YouTube, it is right over here as well, Evertrade. Evertrade, so YouTube. Now let me get back to the presentation and open it up, and then let's continue our presentation from there. So Evertrade's unique technology, EverProtect, is a revolutionary one-click risk management tool available on Evertrade, BetTrader, and Evertrade Go app. Of course, you need to be a client of us in order to take advantage of that. The purpose of that is with EverProtect, you can purchase protection against losses for a defined period after you open a position, right? So if the protection ends and you have an open position that is losing, Evertrade will reimburse the loss directly into your trading accounts. The only cost is the EverProtect fee itself. Now, in terms of our agenda, we will be discussing why to trade indices, the inverse of indices, the fund flow, the defining levels of them, and defining a strategy. So this is what pretty much we will be discussing in terms of our analysis. Now, we're going to go back to our lovely MT4 platform, which I am more than sure that a lot of you guys are already aware of that. So as you can see, currently the market is down massively. So let me just show you a few things. So if we go to, let's say, CNBC, for instance.com, where we can see the futures market, that how far the futures are trading in. So if I click over here, let's say US, so what it tells me that the futures are down. Obviously the cash market is not open yet, then which means the stock market is not open yet, but the futures are down by over 222 points. And that can also be verified by looking at the chart, because this is your futures chart. So if I just change the time period from there to 30-minute time frame, it just kind of shows that, okay, we're still trading very close to the bottom of the day, because this is where the bottom is, but prices have started to show some sort of support. Earlier, there was a lot of pessimism, but on the 30-minute time frame for traders who like who trade on a daily basis, I think the opportunity is really here in a short-term way. Because why? This is your number one point right over here, the RSI, because remember, anything below 30 represents an opportunity. So over here, the RSI was at 30, and then we had the price touching right over here. And then what happened after that, the price went back up. It went to its 50-day moving average, and because this is your 50-day simple moving average, and then it started to roll over. It just had another fake breakout over here, which it failed to remain above that, and then the market started to roll over again. But now what we're seeing is that as long as this low remains the lower low and the new low remains the higher low, what I mean by that is, let me just draw that. on the chart so that you can understand. So let's say this is your lower low right over here. Now, for instance, as long as the new low that we are going to see for this particular asset remains above this particular low, right? Because this is a much lower low and this is a high low, we can see a reversal in terms of a price action, meaning the price can really move to the upside from here where we are trading right now. Now, of course, there's no guarantees about anything. Price can remain irrational for a much longer period of time than one can imagine. But what we can do is we can go into a long-term time frame. Now, I know that I've taken things a little bit more on the deeper end to begin with. So now I'm going to reverse and then I'm going to start things on a more elementary level to begin with. Now, Dow Jones is your US index, which represents the top 30 stocks, American stocks. The reason we trade indices is because as a retail trader, when I used to be at in your shoes, obviously I had a limited capital. I had about 3,000 to 4,000, what I started with, and with that amount of a capital, you cannot invest in every single stock. So what do is that you look for the indices to get exposure to all the big stocks. That's where you wanted to have an so imagine with a $3,000 or $4,000, can you really buy the top 500 companies? No, certainly not. Can you buy the S&P 500 index? Yes, you certainly can. Can you still get the amount of volatility that you are expecting? Yes, you can, because indices are highly likely to, they have more volatility in most of the cases, because the daily range is quite high. For instance, the Dow Jones futures, we looked at it, they were down 250, nearly 30 points. Earlier, they were down well over 500 points as well. So obviously, we've made a recovery to a certain extent, but that's just that's just normal in terms of a futures market. So what we are looking right now in front of you in a very, very simple English is this is the price for the candle chart for the Dow Jones index, and we have 3 different moving averages on that. In order to draw these moving averages, all what you got to do is go to insert, you go to indicators, and then you go to trend, and then you go to moving averages. From here, you change the period to 50, you change the period to 100, you change the period to 200. That is what you do, and then you get your moving averages on the chart. Now, the importance of the moving averages is that the moving averages do really work most of the time, because, for instance, over here, when the price fell below the 50-day moving average on a daily time frame, and remember, this is your daily time frame, guess what happened? The price took a turn down. We saw this massive sell-off, and right over here, when the price crossed above the 50-day moving average, guess what happened? We had this massive run in terms of the price. Again, over here, the price went back above the 50-day moving average, and then price had this massive run all the way. Now, given the fact that the price has crossed below the 50-day moving average once again, and it has also crossed below the 200-day moving average as well, it means we are likely to see a little bit more pain. Now, how far that pain can go, how low the price can really go, I mean, obviously no one can certainly say that, but one thing, what we can indicate with respect to this particular price action is that we can look at the areas where it is highly likely to bounce. So the first area of support is going to be near the 200-day moving average right over here. For those investors who like to play a little bit more safer, who don't like to take too much of a risk, but for the investors who like to take a little bit more risk, then this area where this rally really kind of started is an equally important as well. In addition to that, there was this massive pattern was formed, and this pattern is known as the bearish pattern. So one being over here, right? And it's called the double top. It's not the exact double top that in a textbook, but it is still a double top. So what these double tops do, these double tops right now kind of pushes the prices to the downside. Now, if the price from here, from this point action, if it crosses and if it goes to the downside, that means we can really see the pricing coming all the way to this area. So this support that we are looking at may not work at all. So let me just draw that once again for you guys by erasing all the lines and stuff. And then we will mark them on this one. So what we're going to do is we're going to put another support line, which is right here. So this is the distance. So let me draw that. So from here, as we said, the double top. So the length of this one is pretty much, if we project it from this particular point to the downside, we are talking about in here or possibly over here as well. But of course, at those points, price will be very, very oversold. And it also means that if the price does go to any of these areas, that there could be an opportunity as well in terms of a price action. Now, what's going to happen after the US elections, which are on the 3rd of November? Prices can reverse their direction. Prices can certainly continue to move to the downside as well. But the more likely chances are, because we still have one more bullet left, which is a second stimulus check, the second stimulus aid package that is likely to come. And when that will come, it should support the market. But at the same time, we also need the coronavirus situation coming under control as well. So, we are in a tough 2 months. So in 2021, things should start getting a lot more better if you are a long-term investor. But if you are a short-term investor, the opportunities are right here, right now. You can short the market currently at its current price, even if you want to, and then you can put a stop loss back above the 100-day moving average. Because as long as the price stays above the 100-day moving average, below the 100-day moving average, your short trade should work. Your short trade should not tell you that okay, either it shouldn't trouble you. But again, you have to determine by yourself that if the risk is going to help work for you. So what I am saying, again, I'm going to make it a little bit more simpler for our newbies. So what I'm saying is that you can open the short trade right now at the current price, and then you put a stop loss above this price level, which is your 100-day simple moving average. If it crosses above that, then that's okay. You reverse the trade, and then what you do then is you put a stop loss over here, and then you try to go to the upside. Of course, there could be an occurrences where the price continues to play with it, but it won't play too much on the daily time frame, because it's 100-day simple moving average is a good average. Your stop losses or those kind of trades, they don't come that much. So it's a bit of a different scenario with respect to that. But right now, in terms of an opportunity, you do have the opportunity to go short. So does that make sense, everything so far what we've discussed in terms of the Dow Jones index? Okay. So someone is asking, can you share how to draw on the chart like you do? So I suppose Sizolt, if I'm pronouncing your name correctly, you asked me this question. So if you go back into the recording, I will show it is I've shown how to draw these charts just the way that I have done them. So if you really wanted to, if anyone else is there anyone else who also wants me to go over that once again? Because if people will say it, then I will definitely do it. There's no problem. Otherwise, if it is just one individual person, uh, oh, but the free drawing. Okay, no. Okay, so the free drawing is a separate software, so you won't be able to. It's not part of the MT4 tool. I'm sorry, so I forgot that. If that's what you're thinking of, no, it's a separate software that I kind of use for myself. You can use any of those softwares, plenty of them available on the market, desktop drawing. Now, if you go short, Ahmed, don't do it on a 15-minute candle. Place your trade according to the daily time frame, because that will help you to retain capital for a longer period of time, and then you can become more successful by that. The symbol is Dow Jones, DJ30, if someone is asking. Okay, so Javier is asking, can you think that how can you apply? Okay, so let me explain the same strategy again. Okay, so for instance, let me pick a point. So let's say that the price was trading. Let me show you right over here. Okay, so let me just make the chart a little bit bigger, and then let me pick an example for you so that it's easier for you to understand. So let's say what we're looking at this particular situation, right? Under this particular situation, what we're looking at over here, let's take this particular situation, that the price has just gone above this particular 50-day moving average. So what would you do, because you don't have the access to this particular chart because the price wouldn't have formed it. So what would you do is you put your stop losses over here. You will enter somewhere in around here, if that is where the price is, and then you will continue to capture the move as long as the price continue to make higher highs. But because as the price comes over here, this is where the previous resistance comes in, so you should be taking some profit because you've got into here. This particular area from here to here was your risk, and then this area from here to here was your profit. So you should have, done the profit management from that. Now, in terms of 50-day simple moving average, what would you have done if you were trading over here? Right, forget about over here now. So if you were to, if this was the candle as of today, this particular candle, you will put a stop loss just behind this one. So this line that I've drawn is your stop loss, and then this is where the active or current price is trading, and then you will let the market to run to the downside. Now, similarly, what we are really looking at the current position is that the prices are moving to the downside. So what we're doing is we're putting the stop loss right over here, or we're putting the stop loss where the 100-day moving average is. So this is aggressive, but this is okay. This is not aggressive. And then you will enter the price right here where the price is. Now, obviously, this strategy is for investors who are very, very aggressive, because there's a substantial amount of a distance, over 1,000 or 15 points. So you have to adjust your slot. You have to adjust your lot accordingly. But then you should be targeting, something like in around this point of area. So which makes about 1.15 in terms of a risk to reward, because you're risking this much and then you're gaining 1.5. So that's what I kind of wanted to do with this one. So overall, Dow Jones index is is turning a lot more weaker, but the opportunities, my friends, they are coming, and they are coming thick and fast. Okay, someone is asking that, you don't understand this lecture. There are further easy lectures. So you probably need to understand what the candlesticks are, and they are all on our YouTube channel as well, so you can look for them. So let me see if there are any other questions over here. What is the relationship of RSI with the entry criteria, if any? Okay, so someone is asking about the RSI. So let's say right now, what we are looking at is with respect to the RSI. So if this is our support zone right over here, right? and the prices, we can see that the price is coming into this one. Now, in relation to RSI, if the RSI continues to move here, and what I see is that the price continues to do this. For instance, price continues to do this, 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 this. But the RSI on the other side, after dropping like here, RSI does this, this, and then this. So what we have is we have a lower low and we have a lower high. So that will indicate that the momentum is some sort of a momentum is shifting, because RSI is making lower highs while the price is still the same. So what is likely, now remember, this is only likely, it's not 100% guarantee, nothing is 100% guaranteed, is that this price will move to the upside. And that means that this short trade which you entered and where you have your stop losses over here or over here, when the RSI starts to put the higher lows, then you probably wanted to close the position yourself. So because that means is that the price is very, very likely to reverse its direction. And what it could possibly do at the time is that if this particular index, let me just actually maybe see if we can change the pen colors. So let's say if this 100-day moving average comes over here, and then the price is over here. So what you want to do is perhaps, you wanted to close your position over here. But if the price then comes up, and then this is your 100-day moving average over here, and then price goes above that, then you wanted to reverse your position. You wanted to put your you wanted to put your stop losses just below that. So I hope, well, the drawing is not the very, very best, but I hope that it kind of makes sense to you. Fundamental analysis is certainly important to it, because today's price action is very much driven by the surge in coronavirus cases. Today's price action is very much surged because of the anxiousness among investors and traders because of the US presidential election. Today's price action is very much triggered because investors are not confident about the second stimulus package. Hope that makes sense. In terms of volume, I'll be honest with you, Ahmed, I try to look at the price and the price more than anything else. Yes, there are strategies, and then we can do that. But I pay more attention to the price because that's the most important indicator. Okay, can we do the same for the NASDAQ? Yes, sure, we can do the same for the NASDAQ, and we'll try to do the quick run with the NASDAQ index as well. So NASDAQ is apparently less weaker than the S&P 500 index, or sorry, the Dow Jones index, because look, the Dow Jones is below the 100-day moving average, but the NASDAQ is only over here. When we compare and then everything is the same daily time frame, same index, same moving averages. And the second position is for the S&P 500 index, and the first position is NASDAQ, because NASDAQ is still quite strong because it is still quite above. So with respect to the NASDAQ, what you do currently under the current circumstances is you put your stop loss behind this particular candle. In an ideal situation, I think this is very reasonable. So if you wanted to put, so let me just draw that again. I was going to change the stop loss, but then I thought that, okay, no, you know what, this is reasonable. So if you put your stop loss on top of this particular candle, and then you can open the trade right now, this trade can work. But if you do open it up, right, and the price continues to move, quickly move the stop loss towards its 50-day simple moving average, and then run your stop losses accordingly then. Javier, I would say that, yes, it is more of a swing trading, because we are looking at the daily time frame. but it's not too much of a swing trading, because look, we have an opportunity over here, we had the opportunity over here, we had the opportunity over here. But the thing with the swing trading is that there are less stop losses, there are less chances for you to getting caught in the noise that we see in the market. So it is good from that particular perspective. Yes, Conroy, everything is being recorded, so you can watch that on our YouTube channel. And again, if you want to interact and if you wanted to learn a bit more, if you have any questions in relation to strategy, in relation to the price action that you read, in relation to you don't understand anything, here's the Twitter handle once again. I'm very happy to answer those questions for you if you have them. And for more information, I mean, like our YouTube channel is over here as well. So feel free to, watch the videos there and subscribe and obviously, do the usual following and stuff. But that's all pretty much, folks, because we went into a lot more detail on one particular index, and that we didn't have enough time to look at the other things. Naim, do you think of any opportunity we can take for this historic election day? Javier, there will be always opportunities in the market. You have to decide one thing, that you can control your emotions. You cannot let your emotions drive your trading decision. You are guaranteed to lose money, which I have when I was as a novice trader, when my decisions are driven by emotions. You cannot make decisions in the trading world by allowing your behavior to dictate that. You have to look at the price action. If it is a historic opportunity, if we miss it, so what? There are opportunities in the Bitcoin price. I mean, Bitcoin price is just going crazy right now. There are opportunities for the DAX index. The DAX is, pierced its bottom in Japan. It is sitting near its 200-day simple moving average. There will be many, many opportunities. All what it is important is you do not blow your capital. You save and preserve your capital. The longer you can save and preserve your capital, the more money and the success chances that you have. All right, folks, thank you so much for joining as always, and I appreciate all the feedback. So feel free to follow, and we'll see you guys next time. Thank you. Same place, same time.